Hello, trading is closed on March 9th, 2020. Let's go over our calls. Look for a gap outside of the day's range. We got that. We said this rally here was poorly timed, that if it were short covering, we should gap under this low. We said if the recent lows held at a target of 31.88, if they fell, target was near 2600, that was too risky for me. We said readings were oversold, but crashes occur from oversold readings. And of course, 28.55 didn't hold. We knew that before the market opened. Look for the pattern with the early high. This is it. Tomorrow has the early low. We get to cross an optional target off the list. Happened back in June, but look how the number provided support here, resistance here. This is the next number. We traded under it in futures. Anyone who went long here in futures could have had a huge rally, but it's frankly too risky for me to recommend that for anyone. Here was a buy signal during the day. It said ultimately higher price would print. Ultimately they did. Now it says this drop won't stick and we'll go over this line, running 802.14. As always, if we gap down smartly, which is entirely possible, then that's no longer a prediction. Not a prediction it won't print, just not a prediction it will. It's still possible that the alternate count works, and we're making a ending diagonal triangle, but my preferred count is that this whole bull move is over. If this is an ABC and A and C are equal, as they often are, have a target around 2600 cash, doesn't mean we'll go there in a straight line, but for this leg at least I think that's reasonable. Wouldn't rule it out. Here's what I have. Tuesday's pattern has the early low. Typically it's a rally day, high in the final hour. If we drop early, more weakness to come. Unless we gap down smartly, I've got a higher target. It's about 80 handles away from where we are now. Doesn't mean you won't drop a lot first. Intermediate term, I think we'll challenge 2600. Not necessarily in a straight line. Weekly bar is completely under the lower Bollinger Band. VIX is far too high. Some of the strongest rallies in market history have occurred during bear markets, which is what I think this is. The high volatility is typical of a market which has topped out. Longer term, I think we could trade under 2100 before the selling's done, but as always, I'm just making a call for the next day. I can change my mind after that. So here's my target for tomorrow. If we gap down, the only prediction I have is a low to high day, early low, late high. But if there's weakness early, then the selling is not through. And that's today's call.